Michael Burry's investment ideology, a deep dive into his contrarian and value-driven philosophy. Michael Burry, a name synonymous with foresight and deep analytical thinking, revolutionized investing with his unparalleled predictions and bold decisions. He is best known for his critical role in predicting the 2008 housing market crash, famously depicted in the movie The Big Short. Burry's approach to investing goes beyond surface-level strategies. It is a profound, research-intensive ideology that revolves around key principles such as deep value investing, contrarian thinking, and skepticism toward market trends. 1. Deep value investing. Burry's investment philosophy centers on the concept of value investing, but with a distinct twist. He looks for investments that the market has underpriced, not based on short-term fluctuations, but due to miscalculations of their intrinsic value. This is what sets him apart from mainstream investors. Burry's method goes beyond simple metrics like earnings reports and PE ratios. Instead, he dives deep into a company's financial statements, looking for hidden value that others may have overlooked or underestimated. For Burry, investing in undervalued stocks is not just about getting a discount. It's about uncovering opportunities that are overlooked by the market due to short-term volatility or prevailing market trends. He seeks companies that are fundamentally strong, but trading at low prices due to external factors or market pessimism. His approach aligns with Benjamin Graham's philosophy of value investing, emphasizing the importance of intrinsic value over speculative trends. 2. Contrarian investing. Burry's ability to swim against the current of market sentiment is one of his most defining traits. While the majority of investors follow market trends and popular sentiment, Burry positions himself as a contrarian, one who actively seeks to go against the grain. His most notable contrarian play was shorting the U.S. housing market in the mid-2000s, just as the housing bubble was inflating. This decision to bet against the housing market, when nearly every analyst and investor was bullish on real estate, was not just bold. It was a calculated move based on his deep understanding of the underlying assets. His thesis was rooted in the growing instability within the subprime mortgage market, and he meticulously analyzed the risks associated with mortgage-backed securities. This approach led to an extraordinary profit when the housing market collapsed in 2008, validating his contrarian stance. 3. Independent research and patience. A key pillar of Burry's ideology is his unwavering commitment to independent research. Unlike many investors who rely on Wall Street analysts or market trends, Burry dedicates himself to thorough, self-guided analysis. This research-driven approach allows him to form investment opinions that are often at odds with conventional wisdom. In addition to his research, Burry emphasizes the importance of patience. He understands that great investment opportunities may take time to unfold, and he is willing to hold on to his positions long-term until the market catches up to his insights. His confidence in his research and the time he dedicates to studying each investment idea allow him to resist the pressure of short-term market movements. 4th, margin of safety. Another cornerstone of Burry's investing ideology is the concept of a margin of safety. This principle, which he inherited from Benjamin Graham and later popularized by Warren Buffett, emphasizes buying assets at a significant discount to their intrinsic value. By doing so, investors create a buffer that protects them from the downside risk. The wider the margin of safety, the less vulnerable an investor becomes to market volatility and unexpected adverse events. Burry's application of the margin of safety is particularly evident in his investment in GameStop. Despite the market's skepticism about the company's prospects in the age of digital gaming, Burry recognized that the company had strong financials, significant assets, and a loyal customer base. By focusing on these factors rather than the immediate market sentiment, he was able to make a profitable investment. His investment was not based on the short-term outlook of the company, but rather on its intrinsic value and potential for growth. 5. Skepticism toward market hype in speculation. Burry has often warned against the dangers of speculative investments, where asset prices are driven not by the fundamentals, but by hype and market sentiment. This aligns with his contrarian nature and deep skepticism toward trends that are driven by speculation rather than solid research. Speculative bubbles, such as the dot-com bubble of the late 1990s and the housing bubble of the mid-2000s, are prime examples of the kind of market behavior Burry actively avoids. In his view, when the media and retail investors begin flocking to an asset class or sector, it is often a signal that it has become overvalued. This is particularly true when the growth in asset prices is fueled by speculative interest rather than fundamental improvements in the underlying businesses. Burry's approach to market speculation can be seen as a reminder to focus on long-term value and not to be swayed by short-term hype. The role of macro analysis, Burry applies macroeconomic perspectives, monitoring global trends like inflation, interest rates, and geopolitical risks. In 2021, he warned about the overvaluation of tech stocks, predicting a market correction due to rising inflation. His ability to connect macro trends with specific investments contributes to his success as a contrarian investor. 7. Adaptability and evolution of investment strategy. Burry has adapted his strategy over time, shifting focus to natural resources like water and farmland in the 2010s. While rooted in value investing, he evolves his approach to capitalize on emerging trends, allowing him to stay ahead of market changes. 8. A warning against overvaluation and excessive debt. Burry often cautions about rising debt levels, particularly in the corporate sector. He warns that excessive debt can lead to financial instability, urging caution in companies relying on debt financing without strong earnings to support it. 9. Predicting market crashes and systemic risk. Known for predicting the 2008 crisis, Burry identifies systemic risks by analyzing financial products and market trends. He cautions against speculative investments in overvalued markets, as seen in his bearish outlook on tech stocks in 2021. 10. Focus on risk management. Burry emphasizes risk management, seeking undervalued assets with a margin of safety. He also hedges investments using instruments like options and credit default swaps, ensuring flexibility while managing downside risk. 11. Investment in real assets. Burry has invested in real assets like farmland and water rights, seeing them as valuable due to demographic shifts, resource scarcity, and climate change. These investments are viewed as hedges against inflation and long-term value generators. To wrap up, Michael Burry's investment ideology is a blend of deep value analysis, contrarian thinking, independent research, and risk management. His ability to predict market crashes and identify undervalued assets has led to massive success in his career. By focusing on long-term intrinsic value rather than short-term market trends, Burry has positioned himself as a unique figure in the world of investing. His dedication to thorough research, skepticism towards speculative bubbles, and emphasis on risk protection have set him apart from conventional investors. Moreover, his adaptability to emerging market trends and willingness to invest in real assets, such as farmland and water rights, showcase his forward-thinking approach to wealth creation. Through his contrarian stance and methodical approach to investing, Burry has not only amassed significant wealth, but has also served as a valuable resource for investors looking to navigate volatile markets. His philosophy reminds investors that true opportunities are often hidden beneath the noise of market hype and short-term speculation. If you found this deep dive into Michael Burry's investment ideology insightful, don't forget to hit the like button and subscribe to stay updated with more in-depth content on investing, financial strategies, and market analysis. Drop your thoughts in the comments below. We'd love to hear how Burry's philosophy influences your approach to investing. Thanks for watching.